Good morning, the fivers. Thank you for joining up to the Fivers Trading Room session for Wednesday. My name is Gil Ben-Hur. I'll be hosting the trading session for today with you. If anyone is not familiar with my trading style, I'm a day trading scalper. To be precise, what I'm looking is to scalp fast moves in the market. I use strong take profit and a very hard stop loss. I am aiming for 15 pips per trade, and what I want to achieve in a session is 30 to 45 pips per a trading session. That would end up with 3 to 6 trades in a session where I wish to net about 15 pips. 45 pips for a day. The way I manage my risk management is that I take a negative risk reward ratio, meaning that I'm risking 3 times more than I'm willing to take. That at itself increase my accuracy rate. And for anyone that attended my education before, I published a break-even calculator for the risk-reward ratio. And so if you're familiar with that calculator that I've created, statistically, I should be greater than 66% with my strategy in my accuracy in picking the trades. I have to be right 66% of the times in order to be a break even. So once my accuracy is greater than 66%, then I am in an overall winning situation. So with that being said, let's go and hunt 15 pips reaction from the market, and I'll show you what I'm looking for, and hopefully we'll manage to take a trade together. If not, you will see where the key levels that I'm aiming for will be at. So my routine begins with an H1. I'm looking for formations on H1 to see whatever price is hitting key levels. I analyze levels. I'm looking at I'm looking for where price is actually reacting at this current time, and with that I decide what I'm looking for. Then I will drill down all the way to M5, M1, sometimes tick charts to time my entry, and with that we'll try to take our trades. So I'm aiming for 3 pips, three trades today. Hopefully we'll take one of them together because we have only 45 minutes to hang out together. Okay, so let's scan on Australian yen. Price is now pushing up, trying to break that record high, right? So they're trying to push back. And if we look at daily, we can see that the whole approach coming up is compressed. If anyone familiar with the term compression, let's see here. If anyone is familiar with the term compression, this means that every time price is going up, it's also going down and consuming the order flow that below. This means that once price is hitting a supply, the whole area here, which is compressed, what it tells us is that there are less resistance from the buyer side. There are less orders, demand orders that are waiting here. So this whole area that is consumed and demand is taking off, if price is being pushed from a fresh supply, price will easily slide down all the way through. So here we have a very good potential for about 350 pips, 360 pips to slide down on a daily chart. So, but that can take a few days. It's way over my range, my scope. So, so it's kind of risky to take a long trades because we assume that these tops are going to be broken. What I expect here to happen is that there going to be another attempt here, a false breakout, and then price will dive through this area pretty much in few days. It will take this whole area, and from here it will eventually continue go up to achieve higher highs. So this is how I see the daily, and so let's take a look what's going on the hourly. We can see that price is being pushed from these tops. It cannot actually make it through. And what is interesting is that price is forming a Quasimodo pattern that may suggest that price can go all the way here in order to start pushing back at least to this demand level. So if we go to a lower time frame, and I just want to do something here, I think it's F8, right? The grid color. Okay, so we can see where price is now. Okay, so our Quasimodo level, QM level, is right here on 76.62. This is where the Quasimodo, I covered this yesterday on our webinar we did with investing. We see price is coming up, making a retracement, and then making a higher high, and then with a higher high, then it's making a lower low below the base of that shoulder. So so in this case, we have a very complex Quasimodo because we have a few different levels in it. So we have this level, this left shoulder, this left shoulder, and this left shoulder. This shoulder was already being taken by this, which was not a Quasimodo back then. So this shoulder is not going to react. For us, it's not something that we want to take. But this one, this left shoulder, is pretty much a good place to sell. And we see that we have enough range, about 20 pips from up there to below. So it's a good place for placing a limit order. So let's have a $1 per pip trade limit right there. Okay, and let's have a stop loss right above the top, a little bit higher than that. We'll drag and drop this like this. So we're going to risk, we have like 6 pips there. So that's a little bit too tight. And price on H1, you can see it's still in the range of this. So if we push this much higher, we have like 28, 30 pips to risk above this top before it's going to make our 15 pips, which is right down there. Let's have it. What if I? So we have 15 pips. Our 15 pips is right about here. Okay, let's go back to M5 and refine it. 56. 150, this is what I want to take from the market. That's one trade we're expecting to take after we have this Quasimodo confirmed for us. So now we're going to be, once price gets here, we're on a trade risking twice the quota that we want to take from the market. That would be one trade that I'm looking for. Then I believe that price, in terms of price action, can go all the way here, and from here decision will be taken if price will go all the way that zone, which is all consumed as well. So if price will penetrate this area, it will go all the way through around here. So that's another 20 pips that it can go from for this consumed area. And then on a higher time frame, we can see that this all zone is, so if you have the patient, you can hold on and see if price will go down here, but be cautious and see if you get the confirmation, because price can try to snake in, create a false breakout before that. It really depends where your stops are. You can be right, but in your analysis, but very wrong with your trading. So I believe you understand what I'm saying if you've been a while in trading. Let's continue. Let's see whatever a few more trades. Lately, I really like the yen pairs. They are really fun to work with. This is the Canadian yen. Let's scan this together. I admit I didn't do much homework today, so we'll do it together. Okay, so on a daily, we see price is reaching up, similar. It's accumulating to go upward, and price haven't hit the target yet, not that supply and not the demand below before the compressed area right here. Let's mark it. This is all compressed. If price penetrate this zone, it can easily slide through about 30 pips here. Sorry, about 300 pips right here. Okay, so let's drill down a little bit. We see price is struggling through, consuming supply above, and we have this another Quasimodo formation. But before we decide if this Quasimodo formation is good for us, let's see if what is this top, what is this reaction came from. Let's see, we mark the top of this, and then we go on the history to see what is the reaction for. So we can see that the greed. Sorry. Okay. Okay. So So we see here there is this spike on the daily. That means that on lower time frame, let's say hourly, we don't have hourly information, but we see that there is a base right there. Price was basing, and this is a reaction for a mid-range flag, and this is the reaction for it. But now price had went down, created a Quasimodo formation with a supply consumed here. So we assume that price is now basing and trying to climb all the way up here. So this have like 60 pips, and I would think by understanding that we are going to consume all this compression zone, and we see that price is being rejected by this base, by this flag. Now let's see how much we've missed, like 20, 30 pips. This is going to be a little bit risky trade, but I do believe that we can buy this at, let's not take $1 per pip, let's take just 50 cents on it and try to get our 15 pips here. While it's a market order, we're going to risk 45 pips. Okay, and we're going to try to win 15, right? 55. Okay, let's refine this. Okay, 15 pips. This is our goal. We were a little bit in a rush to enter. It's not a good advice. This is why I was taking half the portion. If price is now going to react to this level, I expect that it would go to this Quasimodo level, and we can try to buy off this left wing right here. And so if that doesn't work, we can have the second portion taking from here, which is the more conservative way to take that trade that we were taking right now. Okay, so let's see how it evolves. So though this is the Cad Yen, let's upscale this a little bit. It's a good supply that it's coming to. So let's see what's how it evolves. I believe that being coming from this demand, the lower demand, it's going to push through. I should have been more patient, but taking a lower risk on this lowing portion, then it's I believe I can get through being punished. Okay, so this is our Cad Yen. Let's see how it evolves. Next, let's continue scanning. Let's see what's going on here. Okay, price is approaching our limit order. Nothing is really, let's take it on 5. It's basing, it's making a higher high on this. Good signs that price is going to get to this level. So yeah, on one trade we are trading with the yen, with the other we're against the yen. So I don't know if this is a good idea, but sometimes it works because technically it's these are two different assets. So let's continue. I like not to look at profit, but to look at profit as points and not as money. It's easier because when you scale up your account, you always trade with the same standards, trading for the pips and not trading for the money value of your pips. So that's one more thing. Let's see what's going on the OZ. The OZ is now making highs. On the daily, we see the reaction is right here on this top. It's definitely wanting to test and to break this, but this is also a reason. This is also a place to take some rest and react upon this. So we can expect here some kind of reaction. Let's mark this. Okay. Okay, so we can expect on this first zone to take some rest out of here. Maybe it can fake out to this zone right above. Let's mark it there. These two levels on the daily are going to give us at least 15 pips in reaction. Let's dive in and see what's going on there on the hourly. 30 minutes. We can see that we have no confirmation just yet to sell anything. Price is very strong upward. We don't want to sell. There's no Quasimodo can be shown here, really. If price will break here below, I believe that this whole formation will be continue upward. So there's no resolution that I can make on the OZ on the short term that I would want to take. So let's try to move on. Let's see the Kiwi. The Kiwi here is very interesting. On the daily, it's actually prove the compression concept. You see this all area is being consumed, and see how much effort was to take price down, not actually breaking demand level around, and see how fast price climb up on this. We've missed that swing opportunity a few days back, but let's see if we can find a reaction to go down. First, let's see what is this reaction came from. H1, we see that it's the flag, the mid-range flag right here, which is responding. It's a midterm, so we're not expecting a reversal from here, although it can create, anything can happen. But, and we still see a lot of force on the buying side from the buyers. So price is kind of making sense that the retracement will happen here, but price should return to go to higher highs, maybe to try to hit these tops. Let's mark it and see if this top, how much range we have this, and maybe we can find an opportunity to buy somewhere. And so on M15, it's not much. It's like we're like 120 points, 12 pips from there. It's not much. Okay, so maybe if we want to take a buy and rely on that very strong incentive to go up, we should look up for trades around this flag or around this basing formation, which can be right here on the fresh demand, on the lower demand, or on this demand here, the decision point, or at the higher edge of the flag, which here. Any of these three levels, we can expect some kind of reaction, considering that we have enough power from the buyer side. We can look up for our 15 pips potential. I see the range is not really promising here. But that is because the price of the New Zealand is very, very low. It's like half the portion. So like 7 pips here is like 15 pips range on euro dollar. So that because that is a factor of the price that is like 60% or 50% lower than the euro dollar. So the range is in percentage, in proportion, it's like half. So okay, so we'll leave it here and wait for price to go lower than that. Let's see what's going on with our Cad Yen. Our Cad Yen is still around there, struggling, not really challenging these tops yet. So we'll hang out. It still look good. Nothing had confirmed that price is want to go down and lower than our second entry, which will be around here at the 80.31 range. So we're still very good on the standalone trade right there. So I have a question. Do you prefer to see fast approach to the supply or demand zone, or would you rather see a slow climb to it, or does it matter much? The question, I understand your question. You ask what kind of approach I would prefer, if it's a fast or slow. It's really depend. If the approach is slow, but in a compressed matter, then I would definitely prefer a slow compressed approach, because I would know that approaching to a fresh zone versus a consumed zone, that gives me the perfect power balance that is clear, coherent for me to trade with. So that's one thing. The other thing is that sometimes when price is spiking up to a level, that also a good reasoning to come and to take that level brainlessly, because usually what happens is that the big players in the market, they have their targets at places, and if we see price being spiked or snapped into a zone from far away, it means that at the area below there weren't any resistance. So that also a clue to tell us that the willing to sell or to buy depends on which zone it is. Let's say it's a supply zone. So the willing to sell at lower prices than that zone does not exist. So and so this is what we call a liquidity gap. It means that there is no resistance there. And so with a spike, like we see this spike here, we can figure out that there are not much resistance in terms of supply until to this area. So this is pretty much the same thing as compression. And there is a saying, easy come, easy go. So you can see this, this liquidity gap, a very long candle to either side, is usually being resolved with a long on the other side. So we can see this the same here. There are no really resistance in here. So it's pretty much similar to compression, but only the opposite. So so both would apply the approach, both type of approach would apply a spike or compressed. A compressed just give you longer time to figure out and wait for your level. Okay, let's continue. Okay, on our Oz Yen, price is flagging a little bit above. We can try buy here later on when price reach here, and then it will cancel our sell. Let's see how it approaches this level here as well. You know what? Let's make a buy limit right here. Nope. Okay, and we set our stop. Our stop will be, like we said, about up to 40 pips. Let's have it on 30. And our TP will be 15 pips. Okay, 11, 12, 15 pips. It's right here where we want to sell. That's cool. It's really working, aligned with our sell. So we sell to exit and we sell to enter. That's cool. But I'm not sure that this limit will give us 15 pips target. So maybe we will have to take less than that. Let's continue. Let's see what's going on with the euro US dollar. On a daily, we're breaking up. We're basing at these tops. What are these tops? Let's check it out. Here's our top. Let's see what it's basing. It's a flagging, a mid-range flagging before the massive compression that was already being taken very, very fast in the past weeks. So we are actually at the end of compression, which is at the end of daily compression, yeah, which is a very massive area to sell from. We can expect a very strong resistance from here. It's a daily, so with a daily, a reaction of 15 pips is pretty is very valid. So price was climbing up. We see price is getting here. Let's see if we can find an opportunity to sell right about here. I don't think we actually can see anything clear to sell. This flagging pattern is not resolved. Anything can happen. Price can spike up, false breakout or breakout. It can also go lower than that. The only thing that I can look up for is this flag area. We can look up for a buy on the top of this flag, and on the decision, remember on a flag we have 3 opportunities to enter. We can take all of them, we can take a few of them, only one of them if we decide. If we want to be very, very aggressive, we can take all 3 of them. It really depends on the range. Okay, so the range is not that high, so we can have one. Let's break $1 into 3 trades. So that would be $3 per pip. Okay, so we'll have the top buy limit $3 per pip. The lower will be $3 per pip, and we have another $4 per pip, which is the mid range, which is the most likely trade to be. So that will be right here. Okay, and now we have to set some stops for all of them. So stop loss. Okay, that's one. In a second, we'll drag and drop everything and fine tune it. And the third one, stop loss below, TP. Okay. Let's get to work. So we have a profit at 6, 7. Does everyone see how I measure my 15 pips with the drag and drop? I have this marking there. Let's see another profit. Okay. 15 pips is right here. And another 15 pips right here. Oh no, that's a stop loss. Stop loss. And drag it low. That's a profit. Stop loss. Profits. Stop loss. Okay, that's a profit. The profit at 50 pips is right about here. Now let's do the stop loss. About 30 pips. Okay, these will be my trades on this flagging price action, and hopefully we'll take our 15 pips right there in portions. I don't believe that all of them will be taking. Maybe all 3, maybe just 1, maybe 2. We'll let time do so, but we know our risk is rigged. We know our portion for that trade was cut into 3, so I'm not risking more than I was expected, but I have 3 entries to get into that trade. The bias is definitely the strong one to go upward, so we'll go on that. Our Cad Yen is not really working on our side for this session, and we're already 40 minutes in, so we'll have to finish up in a few moments, but this will take this will probably take few more hours to resolve. Just to remind you that if price will get to this lower left Quasimodo level, we'll take it. We'll take another buy. So we were good to take just a half portion, 0.5. Let's take the other 0.5 here in the limit order. With the limit order, place our stop here. It's at below, and our profits 30, which is 180, right? Okay, so we have here, and we push our stop loss below around 40 pips. Okay, so this is our setup that we're expecting to scalp with 2 entries, breaking our $1 per pip market value to pip value to 2 trades of half a pip, half dollar per pip. Okay, there is a request for US dollar yen. Let's take a look and see if there's anything interesting here. Okay. Okay, yen is really compressed on a daily while it's being inside a range which is very hard to resolve. On the main daily bias is very hard to understand. We do have a first time a good reaction to stop these latest lows, but it's not really decisive. Price had reacted to this flagging area. I would, in order to actually understand that, so let me rephrase. Because we see a strong hourly trend going down, but then we see it being blocked and reacted pretty much hard, but not yet broken the second level. Okay, we have this latest base level that was broken, all right, but the other level was not broken yet. It's really hard to say that the bias had changed. We see very early signs that they are, but it's still not decisive. I wouldn't bet on selling this area or thinking that this area can be broken. We will have to let price action show us if this can be broken. If this will be breaking, then we can start looking for long trades, long scalps in here. The range here is very cool. There are 30 pips all the way to this top, and I think price is aiming there, but I will not be impulsive to take it at this moment on the tactical level. On M5, I think we see a very good early signs that price at least wants to challenge this top. So, but still, we've kind of missed it 20 pips ago. So, so I think price might go to challenge these tops in 20 pips from here, but it's going to be 20 pips lower or higher. So there's no, in terms of a trade, there's no good opportunity. We've missed it before. we should look for a good retracement to maybe around these areas again to try to buy with it. But then again, it's still very unclear what's going on in the yen for me in terms of taking these short scalps. I would prefer that price would hit a major hourly or daily key level with a very coherent, clear price action um, to confirm that this area is near to react. So in my rule book, I don't have a trade here just yet. Okay, I can bet but not trade. Okay, we are 3 minutes off, and let's just recap what have we done here. We had an impulsive trade on the Cad Yen, and ever since we bought it, it's declining because we were impulsive, because we were buying at supply. So that was expected. We have another trade waiting at the Quasimodo level. We assume that this trade will go much higher because of the the higher time frame bias. We have now another execution for the OZN. Let's see what's going on. Yeah, it's dropped into our buy limit Quasimodo level here. Okay, so now price being bounced in that zone, and let's see. And you see here we have compression and liquidity. Let's see what it really tells us. If this is a consumed area, or if it's if this is accumulation of trades. Well, we'll know very soon. Okay, so price is strongly rejected. There are some energy injected into the market, at least on the lower time frame. Let's see price penetrating this M1 compressed zone. That should be easy if it penetrates here, and it can go all the way up here. Price was winning the stop before, so if we'll go through this compressed zone, then we can go higher, and that can be a cool trade to take as a winner. So let's stay a little bit longer with this broadcast and see how it evolved. Give me 2 minutes to get some water and see what's going on. Okay. Okay, I'm back. And one still doesn't give us good price action formation. It doesn't show that rejection is um, breaking or attempting to break higher highs, lower highs. So let's wait a little bit more, see how this one resolve. If this one is not resolving, maybe prefer to take a smaller loss and not go all the way to my stop loss, because it's just not very convincing at this moment, but it's yet to be resolved. So let's wait a little longer for this. Okay. Also with the Cad Yen that we're in, there's no much decision. We'll have to wait. Let's scan for more, for not getting bored and just stare at the screens. Okay, cable is hitting this top. Okay, it's a whole consumed area, which was penetrate pretty much easy, all this area you see here. And now it's on the end zone of that compressed zone right here. This is a fresh highest supply that price is reacting to right now. So let's go into lower time frame and see what's going on. And yes, we see that price is reacting to that zone, and it's a 68 pips reaction with 18 pips. That's 19 pips, 20 pips drawdown if we were taking on that level precisely. There isn't a Quasimodo here, really, because of all of these tops. And price went down into a deep retracement, but is being bounced on this mid-range flag, which confirmed that if we were taking a flag scalp, we would already taking our profit from here. We should have been there. It's like 2 hours ago. Anyway, let's see how this goes. Having this flag holding price, we don't know yet where it's going. It can be the last price, the last level that price had to go before continuing pushing up, or it's just a bounce off this, a temporary bounce. It may be respect this high and continue going on. We don't know yet. We don't have any confirmation for either way. So we don't have our trade. We could have taken our trade on this flag if we were here at the right time before the New York session began. So this is CAD, cable. It's consuming its way up. Maybe, let's see the range here. It's like 20 pips. Maybe taking a scalp here. selling against the no demand. That can be cool. We still in this range. We have the whole compression range is about 15 pips. So if price would go higher here, we can start looking for a sell, and we can just take 15 pips off the range. We don't need any any um, any price action that actually break levels. If price just breaking, not just respecting the flagging, the flag, we can just sell off this and making our way to profit. Cad Yen, what's going on? Cad Yen price is strongly pushing up. Maybe we'll get our break anyway. And the Aussie Yen, our buy is good enough. We have this. Now we're at the compression. We have penetrated the compression zone. We can expect that at least to this range, we are going to have a smooth coming through. When I'm saying smooth, it doesn't necessarily mean one candle, but in very few candles, fewer candles than it's actually taking to accomplish this whole down movement. So let's see it in action. You have to excuse me, but I really love the overview look. So I a lot of times I just zoom out and just use the scale, and I just see the formation of the market rather than looking at the candle, because this is what important. What I'm looking for is where the tops are, where the formation, how the formation are looking. So this is how I look at things rather than just looking at the candle itself. It doesn't tell me much unless I want to go and investigate more on how it actually um, was built from. But so I find it looking at such. You can see here another micro Quasimodo level, this one, and price is pretty much reacting to this on the micro level. You see that left shoulder, it's reacting. If you can see something like this on an hourly and daily, this little spike um, reacted by a daily formation for the very same pattern, that would have given you enough pips to scalp. On M1, it's definitely not worth it. So Cad Yen had returned to break even. Okay, the Japanese yen had broken that flag, and now it's challenging this top at the end of the compression zone. Um, so price is definitely aiming higher with um, the dollar yen. Kiwi is still crawling. We'll wait for it to come to our flagging zone. Okay. On the Aussie yen, I think I will um, dismiss the sell limit above and just live with this buy trade. So we end up with Cad Yen and Australian yen. We are selling yen versus the Australian and the Canadian. And let's see what we can come up with. GU is reaching end of swing. Let's see. Yeah. Okay, like I said, for the GU, I would be looking for breaking the lower of the flag, understanding that this flag as handed was completed before I would think to buy. Or I would still be wanting to sell something at the range that would give me my 15 pips off this flagging channel or this micro supply. This is what I would attempt to do with the cable. Okay, Cad Yen is about break even. Let's see if it can challenge these tops and give us some bread and butter. I'm very convinced that um, the OZN will end up with our 15 pips. I see this flag, this formation is being broken. I see the yen is being sold hard on both Canadian or the Australian. I believe with the other as well with the US dollar. So I'm pretty sure that we'll eventually make it to the target. It's very tempting to look at the candle and wish the candle goes with my decision. But I strongly advise that we'll be try to use our time in a more efficient way. And while we see our trade and knowing that we have our targets hard placed in the market with limit orders, with stop stop loss and take profit, we can go and continue do other tasks like scanning for more opportunities in the market while it happens, instead of just staring at the screen. So let's see if we can find something interesting here. CAD. I have laid out all the pairs, that we're trading in the 5ers. Here's a cool thing. Let's see if I see it right. Okay. CAD penetrating long-term compression area, now being compressed upward. There is no demand here. We're about a fresh supply, hitting fresh supply on the H1. Let's mark this and see if we can here's fresh supply that once price hits versus this compression zone. That's very cool. We have two types of confirmation here. Once price has we can see that price is down trading, losing force on the higher time frame. So the bias is going down. We see price is crawling and being compressed while approaching a key level. And price had already penetrated compressed demand zone for a higher time frame. So we have like 3 signals to just look for the best timing to sell CAD. So I think it would be wonderful to sell at this fresh zone once it gets there. So now price is bouncing over this flag, and maybe it now creates its final approach to this zone, which we would want to sell from. Now our OZ and CAD versus the yen, we're pretty much near target. 5-6 pips from it. Let's hope it will get it on this session. I have this request to check the Swissy. Let's check the Swissy. What's going on? Swissy. Swissy is pouring down. Okay, for the Swissy, I have a technical issue here, which is that I cannot really see well the levels here. This is because I don't have enough historical data from 2015, which is the levels that we are at right now. So we can only be tactical on a very low time frame and see what's going on with the Swissy. So I believe if price is crawling down like this, and now there's compressed no supply zone here, that explains this pick, but I don't know if we could have taken it, if we had any signal to actually take this. Let's see on M5 maybe. No, I don't see anything in particular. The signal for me to buy is when this area was broken, and after this area was broken, price had not yet returned to any key level. So so I don't have okay, so here's a good initiative. Danny is suggesting something. Let's see his screenshot. Okay, this is Danny screenshot. Danny, would you like to take the microphone and talk to us about what you're showing us? Okay. Well, Danny, okay, so I'm giving you the right to talk, so try to, sorry.
Can you guys hear me?
Yes, we can hear you.
Oh, interesting. Sorry, wasn't prepared for that, but I just saw that you didn't go far enough, so I wanted to help. What I think here is that we're kind of approaching a resistance on the downside, although maybe not quite there. Perhaps closer to the 0.8700 level is where I would look for a reversal on the higher time frames. However, if we go on the daily, I do think that the dollar is, major dollar pairs are quite extended, and I think the pullback is something that is quite possible. That's my my thoughts.
Okay, Danny. Okay, for me it was a little bit hard to hear you because I had a lot of echo. So I'm not sure if I understand what you were saying, but I really like the idea that any of you would participate and show your take on the market. If you want, we can try again. I can let you share your screen and show everything more dynamically, and if you're willing for that. Yeah, okay, I understand that you're not in the place to talk, but just know for the future that you are very much welcome to show your take on the market. Okay, so let's go and see what's going on with our trades. Thank you, Danny. Yeah, I think we're about to hit something soon, hopefully. We have to challenge this top on the, it's an hourly pick. then it can be hard to be broken. We're 12 pips with the Cad Yen. Remember, we had to deal some drawdown with it, but it's a good trade because we're within the flag, and even if that flag is not being completed and turned out to be a double top, we're still going to take our target, hopefully. So, and all signs are showing that it will attempt to these tops. So I hate to talk to show too much confidence about this, but this is what I expect to do. If price will turn against us without hitting that 15 pips and go lower here, I think we'll take a minor loss on this. So don't take my confidence too much. It's just for the sake of what I'm wishing for in that trade. Cad Yen, that's it on the lower time frame. And Danny, I apologize, I didn't understand your explanation, but yeah, please next time try to find a quiet spot and talk to us about your view. We're very interested in creating this open environment for everyone to express their trading ideas to everyone. Yeah, the room is open Monday to Thursday at around New York opening bell. That's 8 EDT. So yeah, feel free to come. In your dashboard, you will have the link to hop in. If you have your charts ready, just raise your hand, write in the chat, and we'll let you share your screens or your analysis or your thoughts in verbal. Let's see what's going on with the cable. Okay, cable and a request for the cable while we wait. Okay, we're way over time, but let's wait for at least one TP. GBP NZD. Let's see. GBP NZD. Okay, GBP NZD. Definitely going up. Definitely reacting to tops here on. Let's mark it here. It's daily supply. Which is here. Yeah, we still have a range to go until to that final supply here, and these tops still need to be challenged. They're not yet to be. Now price is retracing back. H1 is approaching flag and decision point. And this is a nice key level right here. Anything can happen from here to here. We just yet to have a long confirmation. Okay, so I would want to see a confirmation for price is pushing upward one of the major flags around here before I would want to buy and rejoin to the main bias here. So that for me is still on the micro selling, but I want to be with the H1 incentive. So I would look to buy from this flag right there. So price hadn't hit this yet. It doesn't confirm that it's going up yet, so probably it will go down. Nothing is can be said for sure. Rick is sending his view on cable. Rick, would you like to talk about to say a few things about your analysis on cable? Okay, let's give you the permission to talk. Go ahead, Rick.
Hi guys, can you hear me?
Yes, we can.
Oh, okay. I'm actually looking to buy pounds USD. What I got on is on the 30-minute chart, and it's bouncing off from a daily pivot, and it's also a potential support at 1.32. So had a low risk at 0.15% for this trade. Risk reward is about 1:1.5. Okay, from my screenshot, you can see that I'm just looking at a short target. So I'd like to know your view on the pounds USD also.
Yeah, that's look a very cool idea. I kind of like your TP is, I think it's in by my understanding, it's placed pretty much where we can expect some kind of reaction. So that would be a very safe TP to take. I believe that you were making, you were waiting for some kind of confirmation. This is why the slightly late entry on your buy, but it's a very good zone to start and try to pick it up. I think looking at these candles alone, I can say that it probably gave a confirmation, a good confirmation on low time frame. I think it's a nice trade. Regarding your stop loss, although your stop loss is beyond below that flag, do mind that your flag is going. Do you see my mouse?
No. Are you actually looking at my screen?
Okay. So I don't know if maybe I'm not sharing. Oh, sorry. Nobody told me, but I wasn't sharing your screen.
Yeah.
Now I do. Okay. So let's recap about your trade. So everyone can see Rick view on cable. It's M30 time frame. He bought at this basing level, and his TP, which I think is quite wise take profit place, is right here, where all this supply, according to my methodology, this is going to be the next resistance, the next challenge for price to come through. So that's a nice place to take your TP before it challenges higher places. Regarding the stop loss, I do want you to rethink maybe shifting a little bit lower, below the flagging area right here, because
that was actually my demand area. So my stop loss is actually based on that doji instead of that tail. So it's a bit aggressive.
Okay, yeah, but considering this flag was not completed, there's no, it's not already resolved. We don't know if it's going to resolve upward or lower. So if it's going to resolve lower, your next shield will be that flag, which price had not broken just yet. But if you put your stop loss inside that flag, which is here, price has the right to go all the way through that flag, and you can take your stop loss while it's going to be rejected on the tip of the flag. So according to price action, it will be safer for you to shift your stop loss a little bit below that flag, because this flag wasn't accomplished yet. Once it is, you can shift your stop loss to safer zone. So that's my only my idea on this. Don't take it for granted. Consider yourself what you want to do, but this is how I view things in terms of what I know. I don't want to expose my thoughts on this.
Thank you very much. Yeah, I'd like to hear different views also.
Sure. Okay. Thank you, Rick. Okay, so I think stuff are not really moving for us. We're stuck on these top levels. Maybe it's going to take a few more. Maybe we'll have a little bit of retracement back before it hits our TP. Maybe we don't get our TP. Anything can happen. But we're very near. We're 11, 10 pips up. So let's see how it resolves in the offline, because we really have to end up for today. We're already 90 minutes in that session. Trades can take longer than we plan our broadcast. So we'll be here tomorrow, same time, before New York opening bell. If you do want to share your ideas, your trading, your analysis, your actual trades, whatever, feel free. It's the time for us to mingle and talk about the thing that we love most, which is trading. So thank you so much for being with us today. Keep coming every Monday to Thursday at 8 EDT. Thank you guys, and get your charts ready for next time. We'll be happy to put you in. You can also get the right to broadcast your screen so you can be more dynamic. Feel free. Okay, so see you tomorrow, guys. Bye-bye.